Somewhere in your life, maybe 15 years ago, maybe 20, you opened a retirement account, or started a new job and enrolled in the company life insurance, or set up an IRA. And on the form, there was a line that asked you to name a beneficiary, the person who gets the money if something happens to you. You wrote a name, maybe your spouse at the time, maybe a parent, maybe a girlfriend you were serious about at 24. You filled in the line because the form required it. You didn't think about it. You didn't come back to it, and you never went back. That name is still there, right now, on a form you forgot exists, inside an account you haven't thought about in years. And if you die tomorrow, that name, not your will, not your current spouse, not your children, that name gets the money, all of it, legally, automatically, without question. This is not a hypothetical. This is federal law. And the Supreme Court of the United States has already confirmed it. Let me show you how this works, because the mechanism is so simple and so absolute that most people refuse to believe it until they see the case law. When you name a beneficiary on a financial account, a 401k, an IRA, a life insurance policy, a brokerage account, a bank account with a payable on death designation, you are creating a direct contract between you and that financial institution. The contract says, when this person dies, pay this individual. It does not say check the will first. It does not say verify the current marital status. It does not say confirm the deceased still wanted this person to receive the funds. It says pay, and the institution pays. Your will, the document most people assume controls everything after death, does not override a beneficiary designation. Not in any state, not under any circumstance. If your will says your current wife gets everything, but your 401k beneficiary form still lists your ex-wife from 12 years ago, your ex-wife gets the 401k, the full balance. Your current wife gets nothing from that account, and there is no appeal. The case that settled this permanently is Egelhoff versus Egelhoff. It went to the Supreme Court in 2001. A man named David Egelhoff had a life insurance policy and a pension through his employer. He listed his wife as beneficiary. They divorced. He remarried. He never updated the beneficiary forms. He died. His ex-wife collected the full death benefit and the pension. His children from the second marriage, his current family, received nothing from those accounts. The state of Washington had a law that automatically revoked an ex-spouse's beneficiary status after divorce. The Supreme Court struck it down. Federal law, ERISA, the statute that governs employer-sponsored retirement plans and life insurance, preempts state law. The beneficiary designation stands as written, period. The court ruled that the financial institution's only obligation is to pay the person named on the form, not the person who should be named, not the person the deceased would have wanted, the person whose name is on the line. Now think about your own accounts. Think about when you last looked at the beneficiary on your 401k, on your life insurance through work, on the IRA you opened in your 20s, on the bank account you set up before your current marriage. Think about whether the name on those forms reflects your life as it is today, or your life as it was when you filled them out. If you got divorced and didn't update your employer-sponsored retirement account, your ex-spouse is likely still the named beneficiary. Not because the system made an error, because the system did exactly what it was designed to do: honor the last name you wrote. The system doesn't know you got divorced. It doesn't know you remarried. It doesn't know you have children now. It knows one thing: the name on the form. And this doesn't just apply to divorce. People name parents who have since died, siblings they're no longer close to, partners from relationships that ended decades ago. Every one of those names is a live instruction sitting inside a financial institution, waiting to execute the moment you're gone. Not eventually, immediately. Beneficiary payouts bypass probate. They bypass the courts. They bypass the will. The money moves within days, and once it's paid, it is nearly impossible to recover. Here is what makes this so quietly devastating. The people most at risk are the people who think they've already handled it. They updated their will. They told their spouse what they wanted. They feel organized. They feel prepared. But the will and the conversation are irrelevant to the beneficiary designation. You could write a will on every page of your life. If the form says a different name, the form wins. Over 60% of Americans do not have a will. But even among those who do, even among the organized, the responsible, the financially literate, almost none of them have recently audited their beneficiary designations across every account. Because the form doesn't remind you. The account doesn't flag it. No notification arrives after a divorce, after a birth, after a marriage saying, "Would you like to update the person who receives this money when you die?" The form sits. The name stays. The years pass. And the cruelty of it is this. The person you actually want to protect, your current spouse, your children, the people in your life right now, will find out that they were not named. Not in a conversation, not in a courtroom, in a phone call from a financial institution that tells them the money has already been sent to someone else. Someone you forgot was on a form you filled out before your life became what it is today. There is no grace period. There is no 60-day review. There is no, but he obviously would have wanted exception. The law is absolute. The form is final. Here is what you do, and it is the simplest, most consequential financial task you will complete this year. You make a list. Every account you have that carries a beneficiary designation. Your 401k, your IRA, traditional and Roth, your life insurance, employer-provided and personal, your bank accounts with payable on death designations, your brokerage accounts with transfer on death designations, any annuity, any pension, every one. You log into each one. You check the name. If the name is not the person you want to receive that money today, you change it. Today. Not after you update your will. Not after you talk to a lawyer. Today. Because the beneficiary designation is the document that actually controls the money. Everything else is secondary. Name a contingent beneficiary on every account, a backup in case your primary beneficiary predeceases you. Without a contingent, the money defaults to your estate and goes through probate, the very process the beneficiary designation was designed to avoid. If you are going through a divorce and have employer-sponsored retirement accounts, ask your attorney about a QDRO, a Qualified Domestic Relations Order. It is the legal mechanism that formally reassigns retirement account rights in a divorce. Without it, the name on the form remains live. Review every designation once a year, not because the accounts change, because your life does. You wrote a name on a form years ago. That name is still there, still active, still legally binding. And if something happens to you before you change it, that name decides where your money goes. Not your will, not your wishes, not the life you built since then. A form you forgot about is the most powerful financial document you've ever signed. And right now, it may be pointed at the wrong person.